Do you want to make $10,000 today? Do you want to lose 20 pounds in the next month? Do you want to be well-liked and respected by all your peers? We can't help you with that. You've come to the wrong place. But if you do want to earn an hour of CPE credit for listening to this episode, right after you finish, head on over to the Earmark app, take a short 5-question quiz, and you earn 1 hour of CPE just for listening to us. Happy quizzing! Welcome to Unaccountable, the world's okayest accounting game show podcast for product news, education, and updates. I am your moderately modest host, Tyler Otto, and I'm joined by the subtly showy Jeremy Van Grohl. Hello, sir.
Hello, are you sure you don't have those backwards? Hey.
Well, I got in there first and put them in, so yeah, we're rolling with them.
That's right. Nobody likes sloppy seconds.
No.
All right. So can I start out to say we're liars?
Yeah, we totally are.
No guests today.
I know.
I feel like this could be taken one of two ways. Is that this guest is so pretty awesome, which we've kind of been touting, that they're busy and we're not priority number one, which we are for no one, or we are really, really down the ladder and they're like, I'm going to make this my last priority with these two schmucks.
I mean, it's our 50th episode, and you know what? What better way to bring it back to just be you and me, right? Where it all began and where it still currently is, because I don't know if anyone's listening.
Yeah, exactly. And for extra fun, I know you and I probably at the same time went out to the Unaccountable Facebook group and posted something. QuickBooks went down today. It was like, perfect. I didn't want to do anything today.
Well, so for everyone listening, we were recording today, May 14th. And, of course, I'm like, oh, thank goodness this wasn't April 14th when this went down, right, for tax day. But one of y'all nonprofit people out there said, no, all of our stuff is due today for a lot of our clients. Like tomorrow, May 15th is our deadline. So I'm really sorry for all you nonprofit folks.
Well, and we don't do taxes, right? So there's that. And I'm relatively proactive. So I went to my fantastic tax preparer earlier and I said, I think it was Monday, I was like, you got everybody extended, you got what you need, whatever, just so there's no sweating.
No, good on you, man. Hey, couple new updates this week, some small, simple things. I mean, first off, Jeremy, there's a wedding. Ian, can I get some wedding bells? I don't know if you heard, but I'm going to self-proclaim myself the minister because I am so excited about the new integration that's coming up between Anchor and Keeper. Like, how much have you heard me just go to town talking about these two, right? I love Anchor. I love Keeper. I love what they're both doing. Now, they have in beta, announced today, their integration where when you get a contract signed in Anchor, it will automatically kick off task templates and workflows and add clients to Keeper and just get that whole transition natively built. You're no longer trying to jerry-rig it in Zapier. I couldn't be more excited.
So I shouldn't call this Kinker?
This is why you're not head of branding.
Yeah, that's right. We're going to call it Kinker. That's pretty cool. You have this going now or not? Do you have Zapier doing this for you now?
I have Zapier doing this for me right now. Okay. And of course, I immediately messaged both sides. I'm like, can I get access to this morning? So I've already been playing with it. And dude, it's awesome. Originally I got scared because I went in and it's like, map your products to what templates you want to kick off. And I was like, oh no, this is a one-to-one relationship. I have multiple templates I might want to kick off, new clients and new questionnaires and whatever else. And no, it's multi-select. You can kick off multiple templates, endless number of templates. You can map it. And then they have things coming down the pipeline, like inviting your client to Keeper is going to be coming up in future versions. But V1 they got out the door is already serviceable. And while it's a time saver, it's also just a quality control check because immediately it's going to look, does the client already exist in Keeper or not? If they do, it's going to add all the templates to the existing client. If not, it'll create the client or it'll send you an email saying, hey, which client do you want this map to? So it's going to just cut down all that work, but even more so, make sure new clients don't slip through the cracks. Because I don't know about you, Jeremy, but new clients are always the ones where it's just there's stuff you couldn't automate that so many people have to do manual things to kick off processes. At least in my firm, this is going to cut down on a lot of it.
Yeah, and I agree with that. It's like we try to get, so we use Notion, right? And try to get all the information in there and kick off the keeper task, and currently using Zapier to do that. And it's good, right? Like there's
Yeah.
always like one of our first keeper tasks is review Notion for all the data points just to make sure everything's there. So yeah, I mean, as cool as Zapier is, if you have a direct integration between these, always going to be better. And again,
Yep.
you know the guys, I don't know Anchor, I know the Anchor guys, not as well as the keeper guys, but they're going to make sure that it is properly staffed and resourced to be spot on. So yeah, pretty cool, cool little marriage happening there.
Yeah. Speaking of integrations as well, I don't know if you saw, but Karbon, they're making moves, man.
Okay.
Did you see what they announced?
I did not. I know a couple like David, our buddy, we use Karbon. I never even played with Karbon.
Oh, okay. So Karbon does a lot of things cool.
Yeah.
But they have announced that they now both have their integration directly to the financials for QuickBooks and Xero. So QuickBooks was already out and Xero is now out as well. So now they're getting into the full quality control space. And, TaxDome hasn't been shy that they're building out their bookkeeping automations. Everyone's getting in everyone's lane, man, but Karbon's making the moves it needs to early.
Ooh, are our keeper friends sweating a little?
I don't know. I mean, different price points, different firms, I would argue for different things. But I mean, some of these, so Karbon, they were one of the ones that amazed me early on because they were one of the first ones to lean on AI to like instantly just go after, hey, we're going to help you write emails, respond to stuff, resolve things back when it was still a novel concept. So they're really trying to get ahead and release the cool new features. Excited to see what they got coming.
Yeah, that's cool.
Well, Jeremy, I'm excited this week because even though I had already written games curated to our guest, which now is not here, we're going to put you through some other ones I've kind of had in my back pocket for a while. And I'm really excited about this first one because we all know when we started our firms and we're getting up and running, eventually that day comes along when you need to hire your first bit of help. And what do you bring on? Is that person a full-time employee? Are they a contractor? Could they be a contractor? Well, Jeremy, I want to play a game with you today. I am calling I Think I Just Contracted Something, where we're going to go through all the rules of hiring an employee versus a contractor and see if we're going to break any laws. Jerry, are you ready to contract something?
I am, and I love it. I think we've talked about before that you and I create games in a vacuum so we don't cheat. Right. And clearly from our performance on some of them, we do not cheat. But I saw the title of this one and I was like, that's fantastic. So I'm ready. Let's do it.
All right. First question. And by the way, this whole entire set we're going to go down. This is all about just the difference between contractors and employees and helping our listeners make sure they don't trip up and be subject to some fines and penalties. So first question. Before we get into any of the specifics, I just want to see what you know. Which of the following jobs is more commonly considered a contractor-friendly job? A call center rep working 9 to 5 on your phone systems? A freelance graphic designer with multiple clients? An in-house receptionist? Or your cousin, quote, helping out but getting paid under the table?
I'm going with the freelancer.
Well done. A freelancer. And why did you pick that answer, Jeremy? Start educating our listeners.
Well, I mean, by nature, freelancing means that you are not part of like integrated in the clients you are working on and have the freedom to take them on or pass on them, as well as a big say in the work that you're completing. Right.
So why not the call center rep working 9 to 5?
I feel like you could argue this. I thought in my head originally that you would have to use company supplied equipment to be on a call center there, but that may not be true, right? You could have your own setup and do it. So maybe that's a fallacy.
But the 9 to 5 part.
Oh yeah. Like
setting the hours.
Yep.
And the in-house receptionist, obviously they're working at your desk. And just don't pay your cousin under the table because it's going to get caught. Plus, your cousin's not that good at the job anyways. Why did you hire them?
Yeah. No one likes nepotism, saying that very much tongue in cheek.
Next question, Jeremy. Which of the following is a benefit of hiring a contractor over an employee? Is it A, less paperwork, B, no benefits required, C, flexibility, or D, all of the above?
Better be D.
We're giving you some easy ones here, and you're right. I mean, I get the appeal, and this is where I want to get into like some actual education for first-time firm owners out there, because the appeal of a contractor sounds great. It's easier to do. There's no requirement for keeping them on certain things at certain times. Labor laws don't apply. I mean, what's not to love, man?
So I recently had a good friend ask me this question. Be like, I'm going to be expanding and hiring some more people, and everyone's telling me to do it as contractors. And I said, I do not disagree with this in principle, but what is your end game, right? If your end game is to have a firm that is going to be continually growing and that you want to lead with an iron fist, no, but like lead with your leadership and direction and expect people to follow and really buy into your culture and everything, that is completely why I went to W-2 employees, is that I want you to be part of our team, cemented in all the things nonprofit bookkeeping.
I love that as an answer, but that doesn't even touch on the legal side of getting into all of this, which I'm going to run through the rest of these questions, but I want to leave time to discuss after. I'm afraid if we discuss too much now, I'm going to give away answers.
All right.
So let's do a couple more.
Okay.
What is the big risk of misclassifying workers? A, they ghost you. B, you end up on TikTok about bad bosses. C, back taxes, penalties, and interest. Or D, awkward team happy hours.
I'm going to go C on this one.
You better. Back taxes, penalties, and interest. So the next question, spoiler alert, Jeremy, we're going to fast fire a bunch of stuff at you. And we're going to go through a lot of the rules. Before we get into those rules, people need to know if you get this wrong and get fined by a state, you owe the back taxes, the stuff you were trying to avoid, the penalties on top of that, and then the interest on those taxes and penalties. And it adds up. Not worth it, in my opinion, to take that gamble.
All right. It would just be state, it'd be federal too.
Depends on which taxes. The states are the usually ones setting the rules on the 1099, so they're usually the ones that are going to find you out.
Got it.
But yes, there will be federal taxes implications. The state's the one that's going to catch you.
Got it. Yep.
All right. So, Jeremy, let's go rapid fire. I am going to run you through 8 real quick descriptions. You tell me real quick, employer, contractor. You ready?
Yes. Let's do it.
Okay. You provide an office and a laptop to them.
Employee.
They set their own hours.
Contractor.
The employer determines the annual wage increase.
Employee. Yeah.
Is trained by the employer.
Is both an option?
No.
Okay. Then employee.
Uses their own systems and processes to accomplish the work.
Contractor.
Performs work that is part of the business's core business operations.
Employee.
The employer determines what tools and softwares will be used to do the work.
Employee.
Employer's intellectual property isn't protected from this person unless it's specifically agreed upon.
Contractor.
Jeremy Van Grohl going 8 for 8.
Ooh.
I mean, granted, it was multiple choice, and hopefully you know this as a business owner. But let's debrief those real quick, because I think there's some big ones in here. Obviously, we've talked already. If you provide the laptop, you provide the equipment, then they're an employee. That's an easy one. Yep. They set their own hours. You said contractor. That's correct as well. If you're saying when and how they work on what tools, resources, or where, they're an employee, and the state is going to try and catch you on that. Now, the employer determines the annual wage increase. You stumbled on this one, but correctly got employee. And this is an interesting one to know because if the contractor comes to you and just says, here's my new rate, your option is to renew that contract or not. There is no annual performance plan or, structure for annual wage increase. They can't be part of your program. Jeremy, does that concern you if you were to bring on a contractor?
I mean, it does a little, right? And it depends the role you're filling, right? Like if you have a very, like I contracted at my previous W-2 job afterwards, and I know I could shoot a high rate out there because I had such specialized knowledge that they needed for the role. It was like, we're going to pay him what he wants to be paid. But if you're a very general, or I don't want to say run of the mill, but like doing a task that is very low level and repeatable and easily trained and known by a lot of people, if you put up a higher rate and I don't like that, I'm just going to find somebody else to do it. Right.
Agreed.
Yeah.
So the next one is trained by the employer. You correctly said employee, and you wanted to say both, but this is where, I mean, let's talk about certain states, but the really pickiest ones, you bring them in because they're their own boss. They already know this industry. They know what they're doing. Essentially, they're their own business. If you're training them because you brought in your cousin to help, they're not their own business coming in.
Yeah, and I struggle with this one because even when you were a contractor and say you're just hiring somebody as an accountant, right? They know accounting, but they don't know your firm, right?
Mm-hmm.
So like, hey, we have a time tracking tool that I expect you to use, so I know what you're billing me, and I know what my like costs are to the client. I have my internal like keeper tasks that I want all the tasks billed out, right? So there's
Mm-hmm.
some level of training, and yeah, it should be a lot more minor on the contractor side, but I feel like you're training both of them to some extent.
Well, and that can be an interesting thing because the next question was uses their own systems and processes. They get to choose what software. Obviously, there's limitations here because you could say, "Hey, my client's in QuickBooks. I'm hiring a contractor to come in." Like you could hire me and you, Jeremy, without breaking the rules. We could hire someone as a contractor to come in and only do cleanups because it's spot work at
Yeah.
random times, project by project based. That makes sense. It's not continual core business. It's one-off things, but you can dictate, hey, this is being built out in QuickBooks. That is the project we hired you to do. You're doing this in Xero. We require that you record your hours in Keeper that we're billing you if we do it hourly, which most contractors aren't hourly. If it is an hourly job, it sometimes get a little bit trickier. So all that being said, yes, there are limitations, but every aspect of the job might be, if you say Windows versus Apple, but they can do it on either platform, good luck winning in a labor audit if you dictate that they have to be on a certain machine.
Yeah, and I think you could take like I just pictured it in my head when you were talking about this to be like, here's a client, do their books. That's what we're hiring you for, and they're like, oh, we're gonna use whatever we want. I'm gonna Zoho this one. Like,
Yeah.
gotta have some guardrails.
So the last one, though, that I thought was the most interesting is employers' intellectual property isn't protected unless specifically agreed upon. Did you know that in most employment contracts in most states, it is presumed there is a confidentiality aspect to it as well as proprietary information? Whereas working with contractors, anything that they develop and work like they develop a tool while doing the work for you, it's theirs to keep. Whereas if
Mm.
they're an employee, it's property of the company.
Yeah, that's interesting. I don't know. I guess we could have tools that are developed like that they could monetize and go
Templates, spreadsheets.
breads. Yeah. Yeah, that is
Yeah.
interesting too. I feel like that's a little rough. Like because like how many times are they doing this in a silo without somebody else from my team helping them? If I had contractors, right, or me, that feels a little icky.
Yeah.
Yeah.
So let's hit the hardest state then. California is notoriously tough on the contractor versus employee distinction. With their notorious three-pronged employment classification test, which of the following is not one of those criteria? I'm going to give you the four and then I'm going to go back read them again with their descriptions. So it's autonomy, business unrelated, profitability unaffected, and customarily independent. Okay, let's go back and read these. Autonomy, A. The worker is free from the control and direction of the hiring entity when performing their work both under contract and in practice. That's autonomy.
Okay.
B, business unrelated. The work performed is outside the usual course of the hiring entity's business. C, profitability unaffected. The financial success of the employer contractor is not correlated in any way with the success of the hiring organization. Or D, customarily independent. The worker is customarily engaged in an independently established trade, occupation, or business of the same nature as the work performed. Autonomy, business unrelated, profitability unaffected, or customarily independent. Good luck.
Oh, that was a lot of words.
I know.
I'm gonna go with C.
I'm really hoping to trip you up. I'm really hoping. You are correct. So the easy one here, California calls it the ABC test. Autonomy, business unrelated, customarily independent. Autonomy, we've talked about already. You do it on your time, your process, your rules, your deliverable. But the business unrelated is the biggest one, and why I wanted to bring it up for most accounting firms, because the work performed is outside the usual course of the hiring entity's business. Jeremy, I don't know about you, but I make most of my income from monthly bookkeeping. I can't hire someone to come in and say they're a bookkeeper on monthly recurring contracts and they're a contractor. Because that is my core source of business, impossible. Now, a marketing agency could hire that same position and they could be a contractor because they're doing work that is not core revenue generating. I think a lot of people miss this part because a lot of states are going to get you on that criteria.
But are other states using the same? We don't know this answer, right? But other states using the same logic to do it, and probably, right?
So the federal rules do state this is part of the criteria, but California is very, very upfront that it's part of it. But if you get into anything in any state, it can't be part of core business operations. Now, like I go back to our example, Jeremy, remember a nonprofit you needed to convert from Applos to QuickBooks and you hired some shoddy new bookkeeping firm out of Utah to do it before you knew you'd host a podcast with them? That was cool because it was a one-time project, not part of your normal operations. And I know other firms that hire out all their cleanups because it's just like, oh, it's a one-time, come in, do the cleanup. It's outside normal operations. But this is where new firm owners, you got to be careful.
Yeah, and also just stay out of California, right? I don't care if you have employees or contractors. I didn't know, like, we just had a job posting out there, and I saw one that you can put states you don't hire in your job posting, and that's okay. I didn't think that was okay, but you can do that.
I didn't know that. Really?
Yeah, I saw one out there, and I'm like, can we do this? And I had my HR manager review it. Yes. And so like right away, I was, but not hiring in New York and California. Not doing it. Like, I don't want to do it. Yeah. So yeah, interesting. And that, like, based on my other rant, that was the downside, is like, I'm all about people being part of the team, being very tied to us, community building, all of that stuff. But the part that gets you is you have to get registered in all of these states. And that's the downside. And like, oh, it gets to be painful.
Just because I know at least one of them listens, to the Californians on my team, don't listen to Jeremy. Don't worry. We love you still.
Sucker.
Hey team, this message is for our bookkeeping buddies out there. And I know when my firm offered only bookkeeping, it was super hard to find a tax preparer to partner with. Well, if that's you, look no further. Me and my team at Specialized Accounting are looking for bookkeeping to partner with. We will do the tax planning and preparation for your clients, and you keep doing the bookkeeping. No longer have fears of working with a tax preparer that doesn't know what they're doing, or live in fear of them stealing your clients. Me and my team, we want to continue to grow, and I want to continue to grow unaccountable without growing the name that we steal clients. So we would love to partner with you. If you're interested in working with our team to do the taxes for your clients, reach out to hello@specializedat.com. That's Specialized Accounting and Tax, specializedat.com. See you soon. And Jeremy, just like that, we are already at halftime. We are already at the part of the show where we head over to the sidelines and take ourselves a nice little bite out of an app. And do you know what we're reviewing today?
Only because I read it, and I'm intrigued by this conversation, but let her rip.
All right, so this is twofold because we reviewed a lot of apps already, and we don't want to double dip yet. So I also was looking through, what have I been trying out? Because I am an appaholic. We all know this.
Mm-hmm.
What have I been trying out lately that has kind of blown my mind? And dare I submit, today on the show, we discussed Microsoft Copilot.
You floated this by me, and I was like, I'm intrigued to how Tyler is using the MSAI to help his team. So, yep, let's do it. I want to hear it. I'm typically not other than like the business, 365 Word, PowerPoint, Excel. I am not a huge Microsoft fan in a lot of things. So,
Microsoft half-asses everything. Like, they have their own, video player stream, but it's just not as good. They have their own bookings engine like Calendly, except it has missing some key features. Like, yes, they They have built so many things to 90% perfection and then just left it alone. But you're right. Their core suite is great. It does what it needs to.
Yeah, right.
So that being said, you're Team G Suite. I'm Team Microsoft Office 365, whatever.
Yep.
And they now have Microsoft Copilot for Teams, which is, our Slack. It's our, G Chat, whatever.
Yeah.
Microsoft Teams. And now I can integrate Copilot. Now, first and foremost, let me say I had to upgrade my subscription to Teams Plus for like $30 a month and commit to a year. And then I had to pay $30 a month on top of it to turn on Copilot. So currently I'm the only person in my firm that has this, and I'm playing with it, trying to see if I want to pay $60 a month per employee to add this or not. Let me talk you through why it's amazing. First off, Copilot on its own, using it as an AI system, has not been nearly as good as ChatGPT for coming up with, images or creative stuff. Perplexity, I found, is still better for research. Claude is still better for wordsmithing and doing things. Copilot fails to all of them.
Yeah.
But now that it's built into my entire email, Teams, all my meeting recordings that automatically happen, I can go through and ask it, hey, on this specific client, which I don't tag every meeting a certain client, it just keeps track, said, hey, what do I need to get done this week? And it goes back through all the transcripts, links back to the spots in the videos, and tells me, hey, by the way, you said you're going to do this, even assign things to certain team members. On top of that, it'll pull in emails of things that might have come in. It almost gives me a summary of my entire universe. And so the AI built into my recordings of meetings, all my sales stuff, all my task management that I'm running through there, as well as just anything that I have like in our OneDrive, which is, our Dropbox, our Google Drive.
Yeah.
It all is relevant. It all gets pulled in. And for that reason alone, it has been a game changer to the point where I'm like looking at how I'm going to roll this out with some of my team members. Hit me with questions.
I'm processing this. That's intriguing because nobody likes the email that I got 10 minutes before jumping on this call from a client saying, hey, where's this at? Or what are we doing here? Right. Whereas probably like myself, you have like 4 clients or 5 that you need to keep pretty good eye on because you're helping out with things where team members are new or whatnot. So I like that. When the information comes back, what does that look like? Like, what is it? A task list? Is it just like a dump? Or like, what does that look like?
So again, it's all about how you prompt it. Give me a task list, it'll give you a task list. And to the point where you can put it in Microsoft To Do, which is their internal task list. Again, not as good as ClickUp or other stuff, but it works. It's on your side panel for one-offs. I love it. You can tell it to draft up emails. I usually just ask for everything back in bullet points. In fact, a while ago, I told it I prefer bullet points, so it just gives me back, here are the key highlights. I also sometimes say, simplify it to the top 5, top 10. It gives it back to me in top 5, top 10. It's honestly, the best part has been it reviewing my entire email plus not even transcripts, but the actual recordings, and synthesizing all of that, even including Teams chat messages, and like finding things that have been resolved, even saying like, hey, this was mentioned in a meeting, the client sent a follow-up, and your employee had a question in our team chat asking you, Tyler, about it. It put all 3 of those together and gave me a summary of where we're at.
Okay, I like that. I'm not jumping to Microsoft world to do it, but that is pretty cool. But like then if you say, hey, I want the top 5 things, what does it prioritize it by? By date? By like, this seems to be Tyler's most important client right now?
Well, so first of all, I'm always been made a point to ask it about specific clients. What's going on with X, Y, and Z client? So I'm trying to synthesize it down a little bit and not just say buckshot, because I don't want to hear about random low-paying clients that aren't even a concern.
Yeah.
But what I will say is once I tease it down to that, it usually picks frequency of it coming up and how recently we talked about it. So, again, I don't know exactly because I haven't seen, they have specific guidelines out there, but what I've noticed is what's been talked about recently.
So, okay, I'll give you, this sounds cool, right? Because again, when you have things going out for that client, but may have not been as proactive as you should have been in the beginning to make a list of stuff. Hey, give me a summary of what I need to get a lowdown for this client. So yeah, I like it. I think that's cool.
And you can ask it, what have I dropped the ball on lately? And it will tell you. It's done several things. Here's what I will say to the listener. If you're on Microsoft, I didn't know this was an option. They don't make it very easy to understand that like you have to like get this extra add-on and how you do it. it's a chunk of change. So if I roll this out, it's probably going to be only to my account managers. But what I will say is, if you're working with an IT firm or bought your Microsoft Office through an MSP or an IT firm that got it for you cheaper, they have to go turn it on. But talk with them about it, because it's not easy to find that this is an option. But once you have it, like I was willing to commit to a year just to try this out. I don't think I'm going to go back from it.
Okay. Yeah, that was my last point, is like, it's not the cheapest option out there. I added $60 per employee. That can add up. But again, as I say with all the tools with our team, take it, and how much time is it going to save you, right? So if it saves you 2 hours at a pay period, what's your rate? Let's do cost analysis around that.
And let me hit one more thing, because I forgot to mention this. This was on my hit list. I also use it during meetings that are being recorded, especially as the owner when you're there as a figurehead, but you've zoned out.
Would you never do?
I know, right, Jeremy? And so you're just there listening, but you're just getting work done in the background. You can have Copilot open on the side, and maybe 10 minutes before the meeting, I just say, hey, give me a summary of anything that needs to be followed up on and anything that was specifically addressed to me. While in the meeting, pulls up a whole summary, it gives me a task list of like whatever. So I can jump back in and say, okay, so after this meeting, so-and-so is going to follow up about this. Everyone sound good? Here's what I'll do. And I look great, even though we all know, Jeremy, I am not.
Until it makes a mistake once and be like, what are you talking about, Tyler? But that won't happen. Like,
it's not less coherent than I already am.
Yeah, right. And that's one thing I do trust. Like, when you talk like those specific prompts with AI tools, right, is like, provide me with the action items coming out of this meeting, and specifically for me, it's really good at bringing that stuff together. So yeah, I like that too.
Yep, while in the call. Well, Jeremy, let's keep this thing rolling, because, we had to pivot this week. Yeah. I got another game for you. I went to town this week.
I mean, I did pretty well on the last one, but I feel like it's only downhill from here.
I had to butter you up. I debated whether to beat you down, then build you up, or build you up, then beat you down. And I chose the latter.
Okay.
We'll see how it goes.
Right order. I like it.
Yes. Jeremy, you know how much I love to torture you with income tax questions, especially because that's why you went into nonprofit world.
Yeah.
You know what, Jeremy, there's so many other ways I can torture you with taxes. It doesn't have to be income tax. It doesn't have to be payroll tax. There are so many other types of taxes out there, to the point that we're going to play a game today called I'm Feeling AtTAXed. Yes, Jeremy, we're going to attack you with all the different types of taxes that are out there. I'm going to read for you a description of some of the types of taxes different states, cities, and counties impose, and you're going to have to tell me the name of this type of tax. Are you ready to play?
Oh, God. All right. Yeah. Get ready for some not correctness here. I like it.
All right. Let's start with like a slow pitch, underhand softball, like wiffle ball right at you.
Don't set it up like that. Then if I get it wrong,
then I enjoy it more. Question 1. This tax is assessed on the end customer that purchases any product, and it is a percentage of the total sale.
Assume sales tax.
Hey, look at this. You already avoided the shutout.
All right,
okay?
Perfect.
Nice and easy. Sales tax, this is one of those ones that, if you start a bookkeeping firm, you need to know how to calculate and process and pay the state for sales tax. It's not hard. Your client should use a point of sale system. Just make sure you learn this. Don't be afraid, because there's no reason not to do this as a bookkeeping firm. Disagree?
No, clearly don't disagree. Like, we have nonprofit clients that sell things, and we have to be worried about sales tax, right? So, and also don't be afraid to call your state's Department of Revenue and talk through it and give them the examples, because they're not, like, all the people I've ever done this with to talk through specifically have been extremely helpful, and I give them the details and be like, do this, don't do that. Perfect.
That's true. When I call the IRS, I get told to like go pound sand.
Yeah.
Whenever I call a state tax agency, they're like, oh, we got you, hun. Like, here's what we're going to do.
Yeah, it is. There's the hun in there too. Yeah, 100%.
It really is. Okay, question 2, Jeremy. Often referred to as a privilege tax, this is assessed just for the right to do business in states like Texas, Delaware, or Tennessee.
Millionaire tax.
I'm sorry. Those states, they have what's called a franchise tax. And that doesn't mean like you're opening up a franchise of a business. Literally, just for running a business in those states, you owe a franchise tax.
Yeah, we have a theater that we support in Texas, and they were asking us about this. I'm like, what? So I had to look into this one. And I'm like, what this really is and why does it apply or whatnot? So yeah, that's an interesting one. And the name makes no sense.
Yeah. And I
Yeah.
mean, it can be calculated different ways depending by location. Sometimes it's based off of net worth, sometimes off of assets, sometimes off of gross receipts, sometimes of not so gross receipts. Either way, there's different ways it's calculated, but it's not a scary one once you just know, hey, it's usually a calculated flat fee every year or quarter or fortnight.
Yeah. Put it in your project management software, file it annually. Everything's perfect.
Yep. Question 3, Jeremy, and you better get this one. Get outside the box right now. Where are you?
I'm in the box. I'm leaving the box.
Okay, get outside the box.
All right.
This tax is a mandatory sampling of fries, cookies, or Halloween candy taken by the patriarch of any dwelling. Often applies to food when it is brought home by children's or spouses.
This is the only tax I like. This is the dad tax. Yeah.
Do you enforce the dad tax in your house?
Yeah. Whenever possible, I will dad tax things, but I often get yelled at and start arguments that that's mine and all. Oh, good Lord, yes. But this is the only good tax out there.
I still defend it from time to time. I'm like, but who paid for it? But who paid for it? And obviously, I don't pull that crap on my wife. Like, let's be honest, she tells me what I get to spend. That woman runs this house and really started our company. But with the kids, oh yeah.
Yeah, I love this tax. Perfect.
All right, Jeremy, 4 more for you.
Yep.
Back in the box.
Okay.
In his new venture, Jeremy's Vibes, an interior design company, Jeremy purchases furniture from suppliers tax-free since the customer pays the final sales tax on those products when Jeremy sells it to them. But Jeremy purchases some plastic furniture covers and shag carpet tax-free that he uses in his corporate office. Which tax is due?
Is the corporate office my van? I can carpet and sales and use tax. Use tax? Go with that. Yeah.
Yes, use tax is owed because, for those that don't, Jeremy, would you like to try and explain use tax?
No, I would not like use tax. I've seen this. Yeah, go ahead, and then I'll.
All right, I'll take it. The best example I ever saw of use tax is back when I worked in corporate hotels, because we would have, one of the hotels I was at, we had 5 restaurants in the hotel. We brought in millions of dollars worth of food every year, and we bought all that food, all that produce, meat, Nicholas, Cisco, whatever, all of it tax free, because the customer in the restaurant would pay the final tax on that. Uncle Sam only gets his cut once, not when the food, is sold from the farmer to the distributor, from the distributor to the hotel. It's when the hotel sells the food directly to customers where Uncle Sam gets his cut on the final markup. Well, we would also feed every employee in the hotel. The cafeteria was open every day, every level of leadership in the company. And so we would have to then go through, calculate, or track in inventory all the food that went to the walk-in fridge or stock room for the employee cafeteria and pay use tax on all of that employee food, because no customer was going to pay for the sales tax at the very end. So we had to pay use tax. Same thing in your interior design company. Normally the customer would pay for their deep-seated sofas, but when you bought plastic furniture covers for your van, you have to pay the use tax.
Yeah, this one, I guess, you explained it well, thank you. But I still have, it makes sense. I just, we have a salon or something that we support that I got way before I niched, and I have to do some of this stuff where it's like, well, this was internally used products on things.
Yep.
And I forget the other example where I saw this ones and I'm like, God, this is stupid. But
the question is, ask yourself, Sam gets his cut once. Where does this cut come in? If it doesn't come in at the end, it's got to go somewhere else. It's in use tax.
Yeah. Yep. Agreed.
All right, Jeremy, 3 more for you. Relevant in almost 30 states and in many cities or counties, this tax applies to short-term stays in hotels, vacation rentals, campgrounds, and more.
Lodging tax? No. Oh, this one.
I'm going to give you half a point, but I like the buzzer just because I can. We're looking for occupancy tax. And it's so annoying because you see it on every hotel bill and you're like, what the heck is this thing? In my world, this is part of what we offer. This is how we say we know hotels, because we obviously bring up the occupancy tax and who's going to take care of filing it. Any stays that are considered a short-term stay are required to have an occupancy tax. I've got some clients that the city, the county, and the state all have their own occupancy tax rates that have to be paid on a short-term stay. That's why hotels are brutal, man.
But like that should be in the point of sale system too, right? Like based on where the location is. Okay. But you still need to know the accounting of it as like where that goes and the liability and paying it. Oh yeah. Okay.
For a bonus point, actually, I'll round up your half a point to a full point. Ooh. If you can tell me where is that delineation of it being a short-term stay to a long-term stay?
Is this the Augusta rule again? A fortnight?
No, it's not a fortnight. One more guess.
4.5 days.
It is 30 days. Ooh. So what makes it even worse is the amount of softwares I work with in the hotel space that then I go to them and I say, hey, I'm working through your software and I see so-and-so stayed over 30 days. Why isn't the sales tax taken off? And they're like, what are you talking about? And even software developers in the hotel space don't know this, that you don't charge sales tax if it's over 30 days or occupancy tax. Question 6. A tax that is charged in some states for purchasing high-gravity beers, liquors, and wine, and it's charged against each glass drank or purchased.
High gravity?
High gravity.
Is that what they call it? Like, is it strong ones?
Yeah, you measure the alcoholic content by its specific gravity. That's how it's measured. So it's high gravity.
Like ABV? What? I'm going to say drunk tax.
Now, this is the liquor by the drink tax, and quite a few states have this as well, where if it's high alcoholic volume, then it pays its own separate tax per drink. Who knew?
This would never pass in Wisconsin. I'm sorry. Like, oh,
I've got a couple clients with this.
Whoever proposed this, there would be riots in the street.
Or your alcohol percentage to meet this criteria would be like 30%.
Yeah, right. Oh, Lord.
Last question, Jeremy. Finally, this tax is applied to businesses dealing with petroleum or other chemicals. It is usually assessed per barrel, and yes, even small distillers get tagged here with this tax.
Gas tax?
The hazardous substance tax.
Ooh, okay.
Yeah, I was not going to get that one either. I didn't know this was a thing, but that's interesting that, there's taxes for everything, man.
Ugh, sick.
All right, Jeremy, looking at it, hey, 3 out of 7. I'm proud of you, man. Dad tax included.
Oh, again, that's the only good tax that's out there.
Welcome to Fast Figures. 10 questions, 1 minute-ish. All answers are numbers. The game starts now.
All right, it is that time. We said, again, as being liars, we said that it was going to be a gauntlet of Tylers in a row asking questions, but here I am. Tyler, you're on the hot seat. No prep. Let's just get it started.
Okay.
Under U.S. GAAP, ownership of more than this percent of another entity typically results in a controlling interest, triggering the need to consolidate financial statements.
50.
Canfield's 50/50 soda that was discontinued last year combined the delicious flavors of how many citrus fruits?
I'm going to guess 2.
The standard large gold bars stored in part.
Keep it.
Keep that in there. All right, let me start that over, but keep that in there. The standard large gold bars stored in Fort Knox weigh how many troy ounces within 10%?
I'm sensing a theme. I'm going to go with 50.
In response to the economic downturn in 2008, certain businesses were allowed to carry back net operating losses for up to 5 years instead of 2. But on the 5th year, the carryback loss was limited to what percent of taxable income within 10%?
50.
The price of gold hit an all-time high recently. Within 20%, what was the market price of gold per ounce at its peak?
I have no idea, so I'm going to go 500.
At what age do you qualify for the catch-up provision in the tax code that allows you to contribute additional amounts to your retirement plan and therefore reduce your taxable income?
Is it 59 and a half or 50? I feel like you're just messing with me, and I'm okay getting it wrong if it's 59 and a half. So I'm going to go with 50 just because I think you're trolling.
In the hit film Goldmember, Mike Myers plays the role of how many different characters?
He plays Goldmember, Fat Bastard, Dr. Evil, Austin Powers. I'm going to say you threw in another one for the 50th. 5.
All right. When a firm is auditing a company, holdings like gold and tradable securities are required to use what level of fair value measurement?
7. I don't even know what you're asking.
This section of the IRS code refers to the recapture rules that apply to investment tax credits, i.e., if a business disposes or stops using property early, it would have to recapture part of the credit. What section of the IRS code?
Public 946? Is that on the depreciation document? I'm going to guess that.
And finally, if you were with 50 Cent in the club, you would roll this number deep. Coincidentally, the same number of knives into club.
You find me in the club. I don't know. 10.
With the hopes that Jeremy does not continually skip one of them, like it's typically the case. Let's keep these. So, first one was under GAAP, ownership of what percent of another entity? It typically results in a controlling interest. You said 50. That is correct. Yep. It is 50. And there is a theme around this being our 50th anniversary episode, which is also what precious metal is the 50th anniversary?
Oh, we talked about this. Is it gold?
Yeah, the golden anniversary. All that.
Okay.
Well all right, done. So we got some themes going. So 1 for 1. Do you have to do any of this now with your hotels? Do consolidation stuff?
Yeah, we do some consolidations. We've got, wrap-ups and management companies. Yeah, it's, Reach reporting makes it easy, man.
Oh, okay. So you just put it into Reach, and as long as the chart of accounts is consistent, it can just push it all together.
Yep.
Perfect.
Yeah, that's the noise it makes in Reach actually when you push the button.
I love it. All right, let's keep going here. Canfield's 50/50 soda was discontinued last year. How many delicious citrus flavors were in that?
I'm gonna guess 2. 50/50.
2. That's correct. 2 flavors. This was a regional one. Actually, was in Milwaukee, so I had no expectation you'd have ever heard of this. I used to love this. I grew up and had it. Any guesses what the 2 citrus flavors are?
I mean, if it's not lemon lime, but I don't even know exactly what drink you're referring to.
It's a soda. Yeah.
It's a soda?
Yeah.
Yeah, I got nothing.
It's grapefruit and lime.
Huh.
It was good. I love me some grapefruit flavor. Like if you get a nice IPA with grapefruit.
Yeah.
Have you ever had Schaffenhofer?
We've got it in the beer fridge.
Oh, that is like the best summer drink. It's only like 2.5%, what are we calling it, gravity of alcohol. Oh, that's a good one. All right, let's keep going here. Definitely in Fort Knox, they have gold bars. How many troy ounces are in a gold bar?
No idea.
You said 50, thinking you were in the theme. Nope, it's 400 troy ounces in a gold bar.
Had no idea.
However, fun fact, do you know what percent of the U.S. Treasury's gold holdings are in Fort Knox?
No idea.
50%. Both.
Really?
Yeah.
Wow.
Oh, where's the rest of it, though? Nobody ever talks about that.
I don't know, man.
Yeah. No. All right.
My basement, underneath the Denver airport. That's what they're holding there.
That's right. All right. So in response to the downturn in 2008, prior to that, net operating losses could only be carried back 2 years. They allowed up to 5 years. But on the 5th year, it was limited to what percent of your taxable income? You said 50. Fantastic guess. It was 50%. So I don't deal with law. Well, we don't have any carryback losses with nonprofits, right? Because, we want them to make money, but they cannot gain from that. Do you have clients that are carrying back losses and thinking even back to COVID days where they're recouping some bad times?
So yes and no. I've got a couple clients this played into, but I wasn't as strong in the tax game back in those days. And so I had clients that enacted it, but I actually didn't do those tax returns, those amendments, those carrybacks. So yes, I've seen them. No, I've never actually had to do them, but the tax software does give me the option.
Okay. And that's what my next question was, is that would be built in the tax software and it would be smart enough to know, hey, you had a loss last year. We can carry this forward in theory.
Yep.
Okay.
Yep.
Got it. Okay. Price of gold hit an all-time high recently, within 20%. What is the price of gold per ounce? You said 500. $3,500 per ounce at its peak.
No idea.
Yeah, but fun fact, looking through and like doing some research on gold, the U.S. Treasury balance sheet values its gold at 40 cents an ounce. So like maybe we are richer than, and this goes back to the gold standard when the dollar was tied to it and all of that, but that is like ridiculously low asset valuation.
Yeah. Huh.
I'm going to come back to that one. I got another thing about that one. The catch-up provision of the tax code, when you're over this age, you can contribute more. You said 50 years old. You can do that.
Yeah, 59 and a half. Also, I think there's an extra milestone, but
There
all the
is.
catch-ups, but yeah, you get your extra $1,000 when contributing. Fast figures, man. It just makes you question what you know.
Yeah. And in that vein, the hit film Gold member, Mike Myers plays how many different characters?
I could count 4, but I think you're messing with me and went to 5.
Nope. The gold reference in that one was the only theme related. So should have went with your gut. It's 4. And can you name them?
Absolutely. It's
here.
Fat Bastard,
I want my baby back, baby back, baby back, baby back, baby back, ribs.
Gold member,
I love gold.
Austin Powers,
Molly, 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 molly.
and Dr. Evil.
The plan goes ahead as planned.
Do you know what gold member's real name is?
No.
Johan Vandersmut.
Oh.
Yeah, there you go. Yeah, learned
Hope
things.
this is on the CPE quiz at the very end.
Yeah, right. And if you want to feel old, that movie came out 23 years ago.
Gosh, I hate you.
God, so old. All right, 3 to go, just so I get through all of them. This one was probably intentionally for you to get wrong. When a firm is auditing a company, things like golds and tradable securities are acquired at what level of fair value measurement? There is 3 levels of fair value measurement. You said 7. This would be number 1. The number 1 is quoted price in active markets for the items, right? So that's the other one. And then beyond that, number 2 is observable inputs, like what is that amount cost right now, right? Or what is the value of it in a secondary market? And then the last one is unobservable inputs, which like internal models and assumptions and whatnot. So,
I learned something today.
a little fun learning fact there. Then the IRS tax code that applies to investment tax credits. If a business disposes property where it got an investment tax credit, it has to recapture and pay some of that back. What section of the IRS code is this? This one, I thought, by the end, it is the only reason I threw an IRS tax code number out there. You said 946. It is tax code 50.
I'll be honest, I tried to be smart, and I was like, I know Pub 946 deals with depreciation and how it's treated and how assets are. And so I was like, Jeremy's messing with me. But nope, I should have just taken the easy one.
Yeah, that one I tried to lob at you. All right, and this one also, this is buried deep in the lyrics of Into Club with 50 Cent, and Ian definitely hit us up with some of that. If you were in the club, you would, with 50 Cent, you would roll this number deep, and I feel like this was a good Jeopardy question. Coincidentally, the same number of knives in the club. In the same lyric, you are 20 deep in the club, or 20 deep with 20 knives in the club.
I was not going to get that one either, but I'm okay with that.
Yeah, 100%. So what do we got here? I think you bet 5 out of 10. That's pretty good.
You know what? I was going for 50%. You are welcome.
All right, then let's get to our winner of the week. I'm going to make both of these a little multifaceted, but the winner of the week is Kyle Crockett, not to be confused with Davy Crockett, who is the new chief accounting officer at Ford, recently hired there. So, like, obviously one of the largest companies in the world. You're now the highest accounting officer. That's cool. Super win. However, I do not think I would want to be any part of the financial analysis of automobile companies right now with input tariffs, and they're there and they're not, and where are you selling it and all that. I feel like that's going to be a tough row to hoe, but
yeah, as sales start going down, costs get more on tariffs, and then you have to increase your labor to deal with it all. Yeah, no.
Yeah, no good. Then, loser of the week. Kohl's now former CEO, Ashley Buchanan, was fired, and this is probably a week or two ago, so a little bit aged, but he left because was shown the door. He's only been there since January, and the reason for his departure was the Commission Security Exchange filing was filed that he conducted business with a vendor founded by an individual whom Mr. Buchanan had a personal relationship and on highly unusual, favorable terms for the vendor. So there was some, and rumor has it, there's a romantic relationship here.
Rumor has it. Sorry.
That, so let's not do that and be shady with your vendors and get fired from a fantastic CEO job, even though I feel like leading Kohl's right now would be hard, unless you're the coupon person, right? Like, get your Kohl's cash.
The hardest part about all these things is where people think they won't get found out. Like, especially when it comes to money, there is a trail. Like, it is easy to track this stuff. Sorry.
What was the other department store that they had all the shadiness on their credit cards thing that we talked about? I don't remember the store anymore, but there was like $2 million of spend, and it's like, it's not material. We're going to fix it.
Again, I'm remembering that. You're tickling my brain at the end of Fast Figures.
Yeah. Oh, good. But then again, win on this one, like, he was still a CEO for 4 months, gets to keep a prorated amount of his signing bonus. I feel like you're going to be fine. You made some jing on that one.
Jeremy, excellent work, sir. That was a good 50-50. I like the gold. I like it all. Next week, hopefully now we got a great guest. Like, this was supposed to be a 1-2 punch. Now, hopefully it's not a 1-2 womp womp. But excited for next week. Great guest coming up. And then you and I are going to be seeing each other soon at some conferences. So plenty coming our way.
Yeah, looks like in-person time. And we're going to record one there, right? Yeah. Oh,
I sure hope so.
You didn't hear the first one at Intuit Connect. It'll be not worse.
Stepping up our game. Well, Jeremy, until next week, sir, you have a good one.
You as well.
3, go.
Shut my Playboy mouth. How'd I turn my shirt inside out? Control your poison, babe. Roses of thorns, they say. And we're all getting hosed tonight. What's going on the fly? I love this record, baby, but I can't see straight anymore. Keep it cool. What's the name of this club? I can't remember, but it's alright. Just dance. Gonna be okay.
Hey Tyler, my staff has asked me to get better knowledge and training in spreadsheets and Excel. Any ideas?
Well, yeah, dude, I'm a little offended. You go to tylerauto.com, we have a course on intermediate Excel formulas. Just have them go over there and use the promo code unaccountable for 50% off.
Nice, gonna do that. Thank you, Sarah.